The Iran war may be happening thousands of kilometers away, but its impact is already reaching economies across the world. From supply shocks to inflation to stock market volatility. The real question is, how is this war affecting India? Hi everyone, this is Shubhi and welcome to Shubhi Speaks. India is an import-dependent economy, especially when it comes to energy, and that makes us vulnerable. So let's break this down. Number 1, energy insecurity. India imports nearly 85 to 90% of its crude oil, and a major chunk of it comes from West Asia. Now think about this. If any disruption occurs at the Strait of Hormuz, it is not just a geopolitical issue. It directly threatens our energy security. And it's not just about crude. LPG and natural gas also pass through the Strait of Hormuz. Number 2, rising import bill. If oil prices increase, India has to spend more dollars for the same quantity of oil. This directly affects our forex reserves, putting higher pressure on it. This means India is spending more dollars than it earns. Number 3, financial markets. During global uncertainty, investors move to safer assets. So, money flows out of emerging markets like India. Result: FPI outflows, reduced investor confidence, and stock market volatility. Number 4, rupee depreciation. More dollar outflow means weaker rupee. This creates a serious policy challenge. If RBI intervenes and sells dollars, that can support the rupee, but that reduces our forex reserves. If it doesn't intervene, the rupee may weaken further, making imports like oil even more expensive. So RBI is essentially walking a tightrope, and that eventually affects inflation and our daily expenses. Number 5, shipping and insurance costs. War zones are risky. Ships either avoid these routes or pay very high insurance, and that increases the cost of inputs, again pushing prices up. Number 6, fertilizers and agriculture. A major portion of fertilizer inputs and LNG passes through the Strait of Hormuz. So any disruption here can impact agriculture and food security. Right now, we may be safe for the Kharif season, but the real question is, what if the war continues? Number 7, remittances. Millions of Indians work in Gulf countries. If the tensions escalates, jobs and incomes can be affected, which means lesser money flowing back to India. Number 8, impact on industries. Industries like steel, cement, chemicals depend very heavily on energy. If the fuel prices increase, production slows, profits fall and costs increase. In the extreme cases, the production may even shut down temporarily. So the real issue is, what if the war continues? Because prolonged war means higher inflation, lower growth, and deeper economic stress. So, what can be done? First, don't panic. Avoid hoarding, because that creates artificial shortages. Second, gradual shift towards electric vehicles and electric appliances. Adopt solar energy wherever possible. Not overnight, but gradually. This crisis sends a clear signal. India needs strong energy security, better storage capacity, diversified energy source, reduced dependence on a single region, and most important, a serious push towards renewables. Solar, electric vehicles, wind, and green hydrogen. Because India has a relative advantage here. And finally, it's not just a crisis. It's an eye-opener, because energy security today is not only about supply, it's also about preparedness. How how India responds today will determine how resilient it is tomorrow. What do you think? Do let me know your views in the comments. If this video added value, consider liking the video and subscribing to Shubhi Speaks. Happy learning!